We're joined by a very powerful panel, former RBI Governor Bimal Jalan, Arnab Das, who's the Managing Director of Roubini Global Economics, and Pawan Goenka of the Mahindra Group. Gentlemen, thanks so much for being with us. Mr. Jalan, I'll come to you first. 5.3%, the slowest pace of GDP growth in 9 long years. Has this come as a blow to you as well? Do you think it's a wake-up call for New Delhi now?
Definitely, like everybody else, I am surprised too. I mean, nobody was looking at it as this kind of a number, 5.3 or something around that number. The minimum that was being expected was between 6.5 and 7, as you know, I mean, from the highest quarters for everybody, I mean, including those who are experts in this area. So yes, it's a big surprise. And the other surprise is that apart from 1 or 2 sectors like mining and perhaps financial services, there is an all-round decline, I mean, as far as I can see from a very cursory look at the numbers. So it is a matter of great surprise, worse than what was expected. And I think we just have to wake up and do something.
We're desperate to do something, aren't we, Mr. Jalan? What you said, that it's an all-around decline. Now, that is the key point. Arnab Das, 5.3%, is this the lowest we can grow? I mean, looking at what is going on, there is possibility that we will slip further.
Well, our central forecast is that the growth rate will pick up a little bit from here as the RBI eases and as expectations stabilize and hopefully the rest of the world stabilizes. But I think if conditions in the world and conditions in India indeed don't improve, then we could have, we could be searching for the bottom for a while, right? And the key issues there are what happens in the Eurozone, does the deleveraging of Eurozone banks and their provision of capital flows to India, which after all has a current account deficit, which is financed by portfolio flows and bank lending, if that deteriorates further, plus exports to the rest of the world, particularly Europe and even the United States, slow down as the Eurozone goes deeper into recession, then we might have external headwinds coming on top of the domestic issues that are impeding investment and maybe even consumption at some point.
Fair point. We need to keep an eye on the external headwinds. But Arnab, at RG Monitor, what do you think is causing a persistent slowdown in India's economy? Because not everything can be attributed to what's happening around the globe.
Well, we think it's a variety of things. There's a lot of blame and a lot of guilt to go around, right? So a big part of the problem, as everyone is discussing, is domestic. India seems to have lost its way in many regards, so the reform process has stalled. Governance issues, corruption issues, impeding foreign direct investment deteriorating. What's called the basic balance, right? The part of the current account deficit that's funded by FDI as opposed to hot money, and hot money is in remission, as we were just discussing, partly because of the Eurozone banks directly and also because of general risk aversion, plus the domestic issues discouraging people from taking a flyer on India at this stage. So lots of blame, domestic and international. Really the ball, though, is in the government's court to improve expectations, pick up the reform process, encourage direct investment, stop these reversals of reforms, and do something about the corruption. That would make a big difference.
Okay, let's get in a corporate view as well. Pawan Goenka from M&M Johnson on the debate as well. Pawan, we've had the slowest GDP quarterly growth in a decade. Now, when do you think will investment pick up? And, in a sense, will the slow investment demand impact GDP growth in the near future as well?
The sentiment in the industry for investment is right now cautious because there is some concern about what might happen to the economy, though there are pockets where investments are going on. In fact, Mahindra & Mahindra is quite aggressive about investments right now, and we have set a plan of 5,000 crore investment in Mahindra & Mahindra Limited and MVML for the next 3 years. And we are looking for a new plant location for our expansion from the current plant.
But Pawan, apart from auto and real estate, consumer demand has not been that badly impacted, whereas, a bit of a silver lining, so to speak. Do you see this too getting affected? Could the consumer story also snap if things continue like this?
Auto sector, in fact, was one of the worst year that we have had in auto sector in the last 3 or 4 years since the slowdown of 2008. Fortunately, again, for Mahindra, we did very well and we had a very good growth of 27%. But the industry growth in the passenger vehicle segment was a very low 3 or 4% only. Tractor segment similarly had also a very low demand growth compared to the previous 2 years of 11%. And the expectation is that the same will continue because right now the general feeling or concern about economy and therefore consumer sentiment is poor. Some of it also is affordability, but at the top of affordability is the consumer sentiment, and therefore the demand in almost all sectors, including real estate, will continue to remain subdued in financial year 2013.
So clearly everybody's going to look for solutions because it's pretty clear that the situation ahead looks a bit dark. Mr. Bimal Jalan, what can be done given the fact that global factors will not help and only worsen from here? What should the government do? What kind of steps should they take immediately?
So far as the world situation is concerned, it hasn't got any worse than, say, 6 months ago or even 1 year ago. Greece was in a problem, Eurozone was in a problem, the rate of growth in US was close to 0 or 1% or something. So, the global situation, yes, it's bad and it has an effect on us, no doubt. But what we have to ask ourselves that why is it there is such lack of confidence in the investing community, in the Indian industry, in Indian investment, in Indian growth prospects? Why? Why is everybody waiting? Tell me, why is the exchange rate depreciating at this rate? Now, coming back to the second part of your question is essentially that these are not, in my view, that we have brilliant people. So it's not a question of people or persons or somebody doing wrong. It's a question of the entire systemic breakdown. You just look at it. How many people are making statements about growth rates? How many cabinet ministers are talking about somebody else, something else? Is this what our constitution envisaged by way of collective responsibility? I could go on, but I think there is a systemic problem in the system.
Systemic breakdown, that's the word from Bimal Jalan. But Dr. Jalan, a lot has been said and written about reforms that are waiting to take off. What's your sense? What is that one reform that could, in a sense, give a jump start to growth?
No, I personally, this is a completely, what you might call, unorthodox view. That it is not a particular reform or a particular policy which is required. It is implementation of what we say we will do that is required. Now just see, why was India one of the highest growing countries? The FDI policy was the same, this was the same, that was the same. Why? So when the lack, so you need reforms, yes, over a long period which are sustainable. But that is not the fundamental problem. The fundamental problem is do what you say I will do. And what you say I will do must depend on what you are capable of doing. And hold people responsible, take tough actions if necessary, and I think it can be done. So reforms, yes. Over a period of time every country needs reforms and we would also reform, but that is not the crucial, the central issue.
Arnab Das, do you agree with Bimal Jalan there that the reforms are not the core issue, so to say, and by claiming that by bringing in FDI and retail, banking, insurance reforms, we'll be back on the 9% growth trajectory? Is that just wishful thinking?
Well, 9% may be wishful thinking. It would put us back on a trajectory towards a higher growth rate and close the gap, quote unquote, the growth gap with China. I think that the objective of catching up to Chinese growth rates, like many people, I think it's a bit absurd and it's the wrong way to run any country, let alone a country of over 1 billion people, is one of the largest economies in the world. It needs to be run on its own merits. And if it's run to grow too fast, there'll be bottlenecks, infrastructure, skilled labor, unskilled labor, commodity imports, you name it, right? And those bottlenecks will show up in an accelerating inflation rate, to which obviously the people of India have and should have an allergy. So to increase the growth rate, what we have to do is encourage investment to ease those kinds of supply-side, quote-unquote, supply-side bottlenecks that are intrinsically inflationary, and then we'll get a higher potential growth rate for whatever level of growth rate we start at, right, and whatever is our ultimate growth objective.
Well, Pawan Goenka, a lot of policy-related issues clearly, as everyone's saying. We need to sort them out, including linkages to coal and power and energy. If they don't get sorted in the next couple of years before general elections, what kind of medium-term impact could it have on consumption growth?
There is a concern about policy paralysis, as it is said that decisions are not being made. And there's so many open things right now. And I would hope that election or no election, in the next 2 years, the government will make some tough decisions which are right for the economy. We need to get back to the growth that we have seen in the last 3-4 years, to the 8.5-9% kind of growth, and hopefully go to double digit that we have talked about several times. But right now, that's way out of reach. And that will all depend on whether the government of India is willing to take tough policy decisions. And I hope the election does not become the reason for make the decisions. The decisions are made more in terms of what is right for the economy.
What is right for the economy? That is really important. We'd like to remind our viewers who are constantly in touch with us on Twitter on this big debate that the question trending tonight, the worst economic growth in 9 years. Who is to blame? Connect with us on Twitter and the top tweets will be out there in a few minutes from now. Mr. Bimal Jalan, coming back to that very issue that Pawan Goenka said that we are running out of time. With growth coming to a grinding halt, you think monetary policy action has any scope left? What could we really do on that front?
No, so far as RBI is concerned, I don't comment on the RBI per se.
Right.
But
Right.
let me talk about general problem of monetary policy.
Okay.
The role of monetary policy in growth or in doing the kind of things that we were talking about is relatively limited in the present circumstances. Because it's not as if monetary, the repo rate or the other rates are 20%, 30%, and you need to reduce it to make your investment profitable. Yes, marginal changes can be required, and I would say we should give the highest priority in our monetary policy, and whether it is done or not done is for the RBI to decide, to investment and growth, confidence, to bring about confidence. Whatever needs to be done should be done.
Arnab Das, where do you see growth for the full year FY13? We've seen a really disappointing growth come in the last quarter of FY12. Is sub 6% the new normal for India's economic growth?
Well, we're in the new normal camp for the global economy, right? So the United States probably going to have a somewhat lower trend growth rate. Eurozone clearly going to have a somewhat lower trend potential growth rate, maybe significantly lower, and certainly a recession this year, quite possibly next year, and those recessions could be quite sharp if they're disorderly outcomes. It beggars belief to think that emerging markets, China, India, other countries, whatever, can sail on and decouple from that story if most of the Western world and indeed even parts of Asia, such as Japan, are growing weakly, right? And clearly China is slowing down now as well. They might be in a better position to stimulate than other economies, other large economies, including India. But India is going to have a significant slowdown. It is having a significant slowdown. We think, it's not going to be a very bad new normal. It's still going to be one of the highest growth rates among the large economies in the world by a long shot. So a bit south of China compared to where it has been, but much faster than historical growth rates in India, but still a deceleration and a kind of disappointment given how much everyone had talked up shining India and potential growth rates reaching or outstripping China in the very short term.
Okay, Dr. Bimal Jalan, given 5.3% for Q4, what are you expecting as far as growth is concerned for the first 2 quarters of this fiscal? What could be the key drivers for growth?
After this experience, I would not hazard even a guess. And I will not even toss a coin to say what will happen. If 2 days ago you had asked me what would be the lowest rate of growth possible, I would have said, well, 6%, maybe 6.5%. No, so please don't ask me this question. Let's wait and watch and hope that those who we have elected, those who are in power, would do something to make India rise again. The external situation is bad, but we can't blame them. It was bad here last year.
No, sir, but let's also put last year in focus, Mr. Jalan, because when one looks at the growth projection, it was revived significantly. Pawan Goenka, do you expect that the government could come back, in hindsight, realize that we need to constantly review the bullish projections put out?
Well, the growth projections for this year in most industries is lower than F11, and that is one of the reasons why the GDP is expected to grow lower than last year. In auto and tractor, we are expecting a moderate growth compared to last year. Again, it will depend on what happens to macroeconomy and also what happens to specific factors that affect that particular industry. Within the auto industry, it is expected that while the average growth will be at a moderate level, there will be some companies that might do very well based on the product offering that they have, and other companies that may struggle during the year.
Well, Arnab Das, rupee depreciation, I think including Pawan Goenka, everyone else in India Inc. is still wondering how to solve that puzzle. How much can one attribute the rupee depreciation to the global crisis, and where do you see the rupee trending from here on?
I think we're going to have a weak rupee for quite some time because we have, again, this confluence of domestic and international factors that argues for kind of a gradual pullback by a variety of international creditors of India, as well as other countries, back into their home markets, right? So the Eurozone banks we already talked about, that's really driven by domestic challenges within the Eurozone countries. Other international investors from the United States, United Kingdom, and the rest of the world that have been pouring money into the BRICS and into India, shining India because of its growth potential, well, they've been scared off or actually, have slowed down their investment process, depending on whether a direct investor or a portfolio investor, because of domestic conditions within India. And at least those ones we have, or the Indian government has some control over, if it can bring itself to correct the situation, hopefully well before the next election. Obviously, that's going to present some political challenges, and that's what people are waiting to see what will happen on that front.
Okay, Arnab Das says the weak rupee is here to stay. Bimal Jalan, what's your take? What can the government and the central bank do to tackle this crisis? Because something needs to be done. We're hitting a new low every day.
Look, I mean, again, I was expecting this question from you. And, what I'm saying essentially is that what is the problem, the issue, is not what the exact rate of exchange is. It is whether it is intended or not intended. I mean, why do you have the kind of change? Say, take 2 months ago. 2 months ago, people were saying rupee is appreciating, am I right? 3 years ago or 3 months ago, situation was the same. So what is happening? What is our intention? What is our exchange rate policy? Can you tell me what it is? So, I mean, ask yourself this question. In the media, as people, we are entitled to know what is our policy. How did we handle the Asian crisis? Just tell me. The worst crisis, one of the worst balance payments crisis that we faced in 2000, in 1999, 1998. How? We were the first to introduce a concept of flexible but managed exchange rate. And the RBI was intervening very heavily, but at a point when nobody expected it to intervene. And so what I'm saying is that it can be done. I mean, India has the power, as I said. I mean, the kind of reserves that we have today. You can talk about current account deficit, debt ratio, $1 trillion GDP, and it's not enough. Though they're taking a view like that is always there.
Fair point. Arnab Das, I'll let you have the last word, because that's what all of us here are worried about. Has India fallen off the radar of large foreign investors? Are they switching off?
No, I don't think it's fallen off the radar. I think people are still very focused on the quote-unquote BRICS. The story of those four countries, let's say. So there's doubts about whether India should be in there. Maybe Indonesia should be the I in BRICS instead of India. Russia, there are doubts about that. China's slowing down. Brazil's having the aftermath of a bit of a domestic credit boom. Everyone's still watching all of those countries very carefully, depending on the country, people are looking for excuses to get out or looking for when will be the right timing to get back in. And I think India will continue to participate in that. And if they start to if the government, this government, the next government, Indian businesses start to do better, then people will flood right back in, because we're in a situation where, although risk is very high, money is still very cheap in the world as a whole, and it's hard to see money getting more expensive anytime soon, right? If anything, there's going to be more monetary easing, not just in India, but around the Western world as well.
That's indeed true, because this is obviously a global phenomenon at the end of the day. The whole money movement from what's happening in the West to Europe and back here, the opportunities, so to speak, in emerging markets. Gentlemen, thank you very much. Really do appreciate your time this evening.